Okay, as we are approaching near the end of this Forex trading course, right, I would like you to, again, get your hands on my free trading guides at tradingwithrayner.com. The link is here, very obvious, right? If not, I'll just put it below this video, right? Go down here on the homepage, download these two trading guides, the ultimate guide to trend following, right? So you can learn how to write massive trends in the market, and the guide to price action trading so you can better time your entries and exits. These two are completely free. So again, get your hands on it before you forget to do so. So with that said, right, let's begin today's lesson. So in today's lesson, you'll learn what are the different types of Forex brokers, right? So they generally fall into one of two types of category, right? Number one is what we call a dealing desk, and number two is non-dealing desk. So let me explain what this all means. So dealing desk broker, what is it? It's basically a market maker, and yes, they take the opposite side of your trade. So at this point in time, many of you will, have, alarms bell ringing. Oh, what? Rayner, they take the opposite side of my trade. So that means, if I lose, they'll gain, and, stuff like that. Yes, typically, if they take the opposite side of your trade and they don't hedge it, your loss is their gain is your loss. Okay? But although it sounds, pretty gloomy, there are, upsides to trading with market maker. Number one, right? Their spread tends to be fixed. It doesn't really fluctuate too much because after all, they are, trading so-called against you. The other good thing is you are likely to be able to trade nano lots, right? If you recall in the earlier lessons, you have standard, mini, micro lot, and even nano lots. So for those broker that are a market maker, they are likely to offer you nano lots. This means that you can trade really, really small size and to adopt proper risk management, because sometimes with, let's say, a $500 account, it's not likely that you can trade a standard lot because it's slightly too big for your account. But with a nano lot, that is possible with a $500 account and still, adopt proper risk management. So this is, I would say, the beauty of, trading with a market maker. Although they take the opposite side of your trade, right? It's not an illegal thing, right? This is just the way they run their business. And there are a couple of, advantages to, trading with a market maker, and otherwise known as a dealing desk. Number two, non-dealing desk. What is it, right? So non-dealing desk falls into two categories, right? STP and ECN. STP stands for straight-through processing, and ECN stands for electronic communication networks. So let me explain both of them. Both are under the non-dealing desk category. For straight-through processing, so what this does is that your broker simply links you to other liquidity providers. So let's say, imagine this is you. Let's call it let's say my name is Rayner R, right? So I go to a broker, let's call it B, and this broker will link my order to a liquidity provider. Okay, this could be a hedge funds, institution, and stuff like that, right? So basically, me over here, right? What my broker do, a straight-through processing broker, is simply to take my order and route it to a liquidity provider. So how your broker earn in this instance is that they will mark up the spread. So let's say the spread over here is trading at euro dollar. Let's say it's trading at 1.3001. This is the bid, and the ask is 1.3002. So what your broker would do, right? This broker would do is that he's not going to give me this particular bid ask spread that's being offered on the liquidity providers. What he'll show on my screen is 1.2998/1.3003, something like that, right? You can see that the spread over here is 5 pips, whereas here is 1 pip. So this is just an example, right? What the broker will do, how they earn from you, is to mark up the spread. So this is an example. In real life, they won't usually mark up so high on euro dollar until 5 pips, but I'm just trying to give you an illustration. So this is straight through processing, right? Link you with other liquidity providers like banks, hedge funds, and other brokers. You tend to have variable spreads, right? As the news is coming out, right? The spreads tend to widen, especially when major news are releasing, because traders are taking away liquidity in the market. And another thing about straight-through processing is that you're unlikely to trade nano lots, because they are linking you with other liquidity provider, and in the FX markets they typically trade with the universal one standard lot. So it's unlikely that you can trade with nano lots if you are going through a straight-through processing broker. Moving on, another one is what we call an electronic communication network. So the difference between this and the STP is that an electronic communication network, an ECN, gives you direct interaction with the liquidity providers and other ECN participants. So what this does is, again, let's say this is me. Again, right? So this is my broker. Let's say this is the broker, the ECN broker. Let's call it ECN. And this is the liquidity provider. So what this ECN does is just connect me, right? It tries to stay away from the, it tries to just put my order route. Okay, it doesn't really put my order through. It gives me the ability to trade within the other liquidity providers. So what this means is that instead of marking up the spread, what they do is they typically charge a commission on my trades. Okay, a commission base. And you're likely to trade nano lots. So the ECN approach is where you can have a direct interaction with the other liquidity providers. This means that you can see the bid ask spread. This means that you can see the raw, let's say the liquidity provider, you can see what's the raw spread. For example, earlier euro dollar was at 13001-1.3. Okay, sorry, I think it was 1.300-1.3001. Okay, correct me if I'm wrong, but the spread earlier was that 1 pip spread that I shared with you earlier. So if you are going through the ECN route, you can access to this raw spread, this really tight spread. But what you pay again, right, is in commission. So whereas the STP, you're being, charged a markup on the spread, right? Whereas for an ECN, you're just paying the commission, right? Basically paying the privilege to access this liquidity provider and to interact with them. Again, right, you're unlikely to trade nano lots. So with that said, right, which type of brokers should you choose, right? Should you go with the STP, ECN, or a market maker? So here's my take on it. For market maker, otherwise known as dealing desk, I would suggest new traders go for it, right? Or maybe swing or position traders as well, right? Why new traders, right? Because for new traders, right, you want to be able to adopt proper risk management. You want to be able to trade nano lots, okay? And only market maker would offer you this privilege because they are simply, making a market for you. So new traders would make sense to be trading with a market maker, right? Swing or position trader, yes, it can make sense as well, especially if, spread is something that isn't really much of a concern for you. So swing or position traders is something that they can consider as well to trade with a market maker. Non-dealing desk, right? I'll suggest this for day traders where you're just trying to fight for every pip in the market. So every pip means to you, you might want to go with a non-dealing desk because you don't want to have a wider spread, right? Because as I've said, right, every pip means a lot to you. So go with a non-dealing desk, right? Maybe just pay a commission, but at least you get to trade with the tightest spread as possible. Okay, so with that said, right, let's do a quick recap. So again, right, dealing desk, you're typically trading with market makers. They typically offer you a fixed spread, and they allow you to trade nano lots. That's really the beauty of it. For non-dealing desk, you have a straight-through processing and electronic communication network. I know it sounds like a very technical jargon. If you don't understand, you can always go back to this video and watch it, right? I believe I've broken it down pretty simply, and if you don't understand it still, just drop me or leave a comment below and I'll get back to you, right? So for non-dealing desk, again, I suggest it's mainly for day traders, experienced traders who know what they're doing, because number one, right, it tends to give you a tighter spread, and number two, you typically have to trade a larger size minimum compared to trading with a market maker. So with that said, I have come to the end of this video. Any feedback, any questions, let me know below. And if you've enjoyed this video, please hit the subscribe button because it means a lot to me. So with that said, right, I'll talk to you soon.